Welcome and thank you for joining San Diego Real Estate Talk with Rosita. I'm Rosita, your host and realtor with Coldwell Banker. In my podcast, we'll talk with experts that are usually involved when you decide to buy, sell, or invest in property, or even maintain your property. The goal is to simplify your San Diego real estate journey, provide you info so you can make an informed decision and achieve your home ownership or home maintenance. Both are important. Today, my guest is Paige Sturgeon, and Paige is a mortgage broker and planner for Granite Mortgage. He's been in the business, I've just recently found out, 30 years, not 20. His company motto is, "We are committed to quality customer service, putting the people we serve first." I love that. Let's bring Paige on stage. Paige on stage.
Oh, I like it. Thanks, Rosita. Hi, everyone.
Paige, thank you so much for joining us today. And I'm so excited because you just mentioned to me that a new program is out. And so if you could super simplify it for buyers that are trying to figure out, okay, do I want to do that loan program? Will it be beneficial for me?
Mm-hmm. So there's a new program that just came out last week with Fannie Mae. And it's actually pretty awesome because a lot of people want to buy multifamily units, so more than one unit. So on a residential property, you can buy up to 4 units, okay, on a residential loan. But in the past, you would have to put 20 to 25% down at most banks, okay? So the caveat is you have to live in one of the 4 units, okay? But now you can get in with 5% down, right? So that's huge. So a lot of people now can get rental income on those other units to help make their mortgage payment and be able to afford and be kind of like a pseudo real estate investor and start their portfolio of real estate, right? With only 5% down. So I get calls all the time like, hey, I want to buy a rental property or I want to buy multifamily, and they can't get in because they don't have 200,000 to put down or whatever, like in the past, right? So now you can get in with 5% down and buy a multifamily property and have other people help make your mortgage payment. That's huge.
So multifamily is basically more than one house, if you will, on the property. So maybe like a twin home or
a duplex,
a duplex. Okay. So, but the key is that they have to live in one of them.
That's correct.
And then rent out the other.
Yep, that's correct. And we'll give that rental income, 75% of that rental income, to qualify for the loan, to help qualify for that bigger loan amount, because the property is going to be more if it's multifamily than a 1 unit, correct? So, but a lot of people have that goal and they go online and they read books and all that, and they want to start in, real estate investing, but they don't realize that you need a lot of cash a lot of the times to buy multifamily. Well, now you don't. As long as you live in one of those units, you can get in with 5% down, which is a huge difference. In my 30-year career doing that, that's never been a rule. So that's going to open up a lot of people being able to own multifamily units and also rental properties, right?
So that's huge. 5% from 20%.
Yeah, and sometimes 25. So 3 to 4 units were 25% down. So it was 1 to 2 units was 20% down. 3 to 4 units was 25% down. So people call me all the time for multifamily. And I go, okay, that's great. How much cash do we have to buy? And they go, oh, I have, $20,000. I'm all, see, unfortunately, you can't because you're going to need 180,000, 150,000. Now, not an issue. 5% down, which is huge, right? So that's a big deal. It's a big deal. And with ADUs as well and things of that nature, people are looking creative ways to help supplement their mortgage, right? And this is a huge way and a huge benefit.
Or even it could be useful for extended families.
Absolutely. Yeah. As long as you live in one, you can move in, like your mom or dad, your brother, your sister, uncle, your cousin, doesn't matter, and you can give them a family discount for rent. You get to decide what rent, right? That you want to charge, or because rents have gone up so much, just like it has for sales prices. I mean, people are seeing the advantage of playing Monopoly. I call it playing Monopoly, right? Because rents have gone up and they can take advantage of that. If they own the property, then they get to, make a pretty good profit on what the rents are right now because there's a shortage of housing, right? And so rents have gone up, and that could be to their advantage of it being an owner as opposed to renting, right? And the tax advantages, right? the tax advantages. You get to write off all the interest. You get also write off depreciation, right, on the asset. So there's a lot of awesome tax benefits and the building of equity and the pride of home ownership, all the positive things of owning as opposed to renting. Okay.
That's great. And of course, if you rent it out like a normal rental unit, not having family move in, that could pay for a majority of your mortgage payment.
That's right. So let's say because you buy a multifamily, let's say it's a 2-unit property and it's $1 million. Okay. Wow. That payment of 5% down is going to be pretty good. But if you could get rent of $3,500 to $4,000, which most of them are now, right? And your payment's $8,000, well, half of it's already being paid, right? So it's not as much as you think, as long as you have that rental income coming in to offset it. And we're going to qualify you with that rental income. So it helps to qualify as well. Like before, it was tough to qualify, right? Not being able to use other income, right, to offset it. So that also is from a qualifying standpoint as well, way easier to qualify for the loan.
Let's say they want to buy the multi-unit, they get qualified, they find a property and they purchase it. Is there a way down the line that they can sell that, just one of the properties if they choose to, or they would just have to do a refi at that point?
Yeah, they could either sell it and take their profit, right, and buy another, or they can even move out, keep it, right? Let's say they bought a duplex, 2 units, okay? And in 3 years, they want a different neighborhood, or they wanted to move in, a bigger house that's a 1 unit or whatever. They can rent out that other side, right? And now they're getting both of those rents that'll hopefully cash flow and make the whole payment, or maybe even have a profit, right? And then go buy another place, right? And then you continue to do that through time. And then you end up, let's say 56 years old, you could have 4 or 5 units or 6 different properties, just continuing every few years to continue to build, that portfolio of real estate and properties. So that's why I call it playing Monopoly, right? Because you want to continue to increase your portfolio to help have passive income later in life. That's why I call myself a mortgage planner and not just a loan officer, right? Because I help people plan for their financial futures by using real estate, okay, to build wealth.
Awesome.
Mm-hmm.
And so what is the name of the program again?
Oh, it's the 5% down Fannie Mae multifamily loan program. So,
okay.
Yeah, it's a Fannie Mae conventional multi-unit purchase where it's owner occupied, okay? So as long as you say multifamily, Fannie Mae conventional loan, then the banks will know. Most banks do it because it just came out this past Friday. Okay.
Okay. And what will they need to provide to you to find out if they even qualify for this type of loan?
Yep, pretty simple. 2 years tax returns and W-2s, last 2 pay stubs if you're employed. Sometimes you're self-employed and don't pay yourself a salary, so we use tax returns instead. So you have 2 pay stubs, 2 years tax returns, and the most recent 2 months bank statements. So what we call 222. And that will give us a pretty good thumbnail sketch of your financial picture, right? Of your income, your assets. Then the last piece is the credit report, right? Where we do a credit check and then coach you to see if there's any things on there that need to be fixed or repaired, or how we can increase those scores, by paying things down, closing accounts, whatever it is. And that's free credit 101 kind of seminar I do with all my clients as well to get them ready. Because the higher the credit score, the lower the interest rate, which obviously saves you a ton on your monthly payment.
Yeah. So like getting a regular real estate mortgage, it's best to meet with you initially to find out what needs to be cleaned off the credit report so that you can get a higher interest rate because your score is higher.
Lower interest rate.
A lower interest rate because your score is higher.
Yeah, exactly. But it's counterintuitive. But yeah, I mean, most people, I would say maybe 50% of the people I meet with, Rosita, to get pre-approved aren't ready yet. So we get them. We set a game plan like, hey, here's where you're at. Here's what we should do to improve your credit score, fix some things on your credit or pay down some debt. Here's some things that we need to budget and save for. Here's realistically what your payment will be if you want to buy in this price range or this neighborhood. So we kind of get them prepared because most people get excited. They go online or they drive around the neighborhood, see an open house, and then emotionally they're like, oh, gosh, I want to buy this house. But they don't know the numbers. They don't know where they're at as far as what the payment's going to be, how much cash they'll need, where they are with their credit score, et cetera. So that's my job, is to kind of get them prepared. So when they get to that point, they know what to expect. And then they're buying in the right price range they should, right? Because what they don't want to do is get their expectations set so high, and then they figure out, oh my gosh, I want to buy this house, and then now I see the numbers. I'm not looking in the right price range, right? Or I wish I would have known because I didn't know these things. I could have, should have, would have, and prepared. So it's always good, even if it doesn't cost anything to meet with me to get pre-approved. It's just my time to see where you're at, give you a free consultation evaluation, and then from there, know where you're at and then where you need to go.
In any kind of loan mortgage,
Yep.
I would say it's so important. That's a first step you have to do, is to work with a lender, specifically Paige, because he will coach you every step of the way. Yep. Find out what your numbers are, and then you'll have that number to be able to go shopping, if you will. That's what I call it. Go shopping for the house you want. And let me just preface this by saying there's not going to be a house that fits everything that you want. So you have to narrow it down to at least 3 most important things that you want in your house. But the most important step is to find out what you qualify for. And even if you qualify for a high amount, do you want to pay that mortgage at this amount? If you want a lower mortgage, then the price of your loan is going to be different as well.
Yeah, sales price and loan amount. So sometimes, you said you want to buy in this range and you figure out your payments. You're like, oh, you know what? I need to be in this range right here, right? Instead of $1 million, maybe I should be looking at 800 or 850, or a condo at 300 as opposed to 400, because we have to factor in HOA dues and property taxes and all the things that I'll teach, the first time home buyers that they need to know. I really give them a credit 101 class and a mortgage 101 class. Keep it simple, teach them and educate them so they understand some of the terms and the jargon, right? And then kind of set them on a plan to get ready to buy, right? And if it's a short-term goal, I'm going to push you as fast as you want to go. Like, I'm not here to, pressure you or anything. People are going to buy when they're ready, right? But I help get them ready. So if they have a goal, my job is to help them achieve that goal the fastest and quickest way that they want to move. Yeah,
exactly. And Paige is the best person to work with in terms. I've had several buyers meet with him, including family, and he has done a tremendous job of coaching them through the way, preparing them to be able to get in a certain price point that they want to get in, because they know, looking at the market, I want this. So how do I get there? Can I get there? And Paige is so patient and so gracious to answer questions and just guide buyers along the way, because this is a lot. This is a lot to take in a very short amount of time. So when you have the opportunity to just find out at no cost to work with Paige and find out, what are my numbers? What am I looking at? And then we can work together to see what neighborhood you want to be in and what price point. Here's this house at 800,000 and here's the house at $1 million. Of course, you're going to want the house at $1 million, but you got to find out where your price point is that you're comfortable with on a mortgage payment. So that's why you have to work with Paige first. And then we go shopping.
We don't want to put the cart before the horse, right? You take it.
Right.
The numbers are the most important part. And once you know the numbers, then it's like, what are those numbers going to, be out there when you tell Rosita how big of a home, what neighborhood, what size, that type of thing. Because then we'll know what the numbers are and what price range you really should be looking at. Because it is an emotional decision, and we all get excited. We go online or we drive by a house or neighborhood and we're like, oh my gosh, I love that house. Yeah, I want to get it, right? We all are humans and we have emotions like, oh yes. But then the rational part is we got to really look at the numbers to make sure it's something that you can actually do, right?
Comfortably.
Exactly. Because what we don't want to do is put you behind the 8 ball, from day one, and then you're stressing and living for only your mortgage payment and you can't do anything else. Right?
Exactly.
So our job is to coach you, get you ready, make sure it's a good decision, make sure you're buying in your comfort zone, and make sure that it's something that's going to be for your best for your family and your financial future.
And if you're a first-time home buyer, this is not your forever home. This is your starter home to get out of renting so that you're not paying your landlord's mortgage and building their equity. This is for you to move from renting into your own home, building your own equity. And then as time goes on, you can move into your forever home. But keep in mind, this is your stepping stone into your forever home.
There you go. Exactly.
Paige, we are out of time. I so appreciate you taking the time to explain the new program. Where can they contact you?
Yeah, the best way to contact me is my cell phone number, which is 619-888-7243. Again, 619-888-7243. Look forward to hearing from you. Call anytime.
And can you just provide your website as well?
Yeah, the website is www.graniteMortgage.net. Again, www.graniteMortgage.net.
Get in contact with Paige if you are even have an inkling of maybe I should look into buying a home. Why not find out what you qualify for?
Yeah, and it's
Why not start the process?
Yeah, it's a free consultation. Just taking the time to meet with me, sit down and going over numbers, learning the process about mortgages and real estate and the benefits, the pros and the cons. I'll lay it all out. And then we'll just start from there and see where the journey takes us, right? So
exactly. Thank you so much, Paige. I appreciate it.
You're welcome.
I am Rosita Perez, your host and realtor with Coldwell Banker. When you have questions regarding real estate, my number is 619-665-9086. My website is rositasaleshometoday.com. We will see you next time. Bye.
Bye, guys.